A free CCI trading lesson 1, combining market geometry and CCI. Free CCI trading lesson 1, combining market geometry and CCI. Good morning, good afternoon, good evening, bonjour, bonsoir mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW 24 traders for CCI trading. Our website is www.dayprotraders.com. Today I want to share with traders a specific trading tips that traders can use, all right, when they are using the CCI indicator. In this case, we want to combine the market geometry and the CCI indicator. CCI stands for Commodity Channel Index. All right. So the scenario that we are looking for a consolidation. So the price will be consolidating first, and then we want a breakout out of the consolidation zone. The opposite is also true in a downtrend. When we see a consolidation, the price is consolidating, all right, and then now we see a breakdown. Price breaks below the consolidation level, okay? So what I want you to do, so here we have, in this scenario, we have a bullish breakout. So the price was consolidating, going to color this line now, okay, into pink, to get the attention of our beautiful ladies that are trading. All right, so now this to make you laugh a bit. So here we are. So we have a consolidation with the pink channel here. All right, so the price consolidating here. What we want, a breakout. Okay, remember that the opposite is also true when we have a consolidation and a breakdown. So when we have a consolidation like this and the price breaks above the consolidation, we will measure the width of the channel, the size of the channel. You see, this is the size of this channel, this pink channel, that's the width of this channel. And as the price breaks above the channel, we'll project it to the upside. You see, my projection is bringing us, by projecting the size of the channel in the direction of the price, it brings us to the green line. But one thing I want you to understand is that because it's a bullish breakout, we will be looking for opportunity to buy somewhere above, okay, the first projection, which is the orange line here. All right, so we want to ignore, okay, the overbought CCI. We want to give priority to, all right, bullish trading setups, because we have a consolidation and a breakout. All right, it's a bullish progression. If we are taking any bearish signal here, we need to be very careful. Sometimes you may see some bearish trading signal along the first projection. But generally, as the price breaks out of the consolidation, we project the channel here. We wait for the price to go above, okay, the projected line, which is the orange line here. And then if we receive a bullish signal above the first projection, we will take it. All right. So here, consolidation, breakout, we project the channel. Here we are. Very often you will see that the price will pull back near the median line, or the price will pull back near, okay, the first projection. So consolidation, we measure the width of the consolidation. We have a breakout, we project the size of the channel in the direction of the price. We have the first projection line, or a new channel here between the orange and the pink line here. All right. Very often you'll see that the price will try to retest, okay, the first line here, and we want to check whether the CCI is oversold. Generally, the CCI may not be oversold or may not reach the level of minus 100, but it will be bullish. Here you see pull back near the zero line, and it display a double bottom chart pattern. The CCI itself display a double bottom chart pattern here. When the price was retesting, was coming near the first projection line. But to improve this strategy, what we can do, so we measure the width of the channel. We have a breakout, we project it. You can project it again, and you can project it third time before the price even goes above, okay, the first projected line. Do you understand? So we are here, all right? So the price consolidating. Now we see breakout. So first candlestick here, somewhere here, you see breaks above the resistance on the left-hand side. This is a resistance. Now it goes above it. Okay, we see that, okay, this is a projection. Price reaches the first line. Don't stop. So you draw the first line. The price here now. We are here now. Project it again for the second time. Above the first line, you will have the red line. Project it again the third time here. 3 times. First projection, second projection, third projection of the size of the consolidation. Have these lines, okay, on your chart. Okay, have them on your chart ready. What usually takes place? You may see that the CCI may become oversold or bullish. This is here, it was not oversold, but it was bullish. So it pulled back near the zero line and it's changing direction. The CCI is giving us a warning that the price may change direction. But as a technical trader, this is a bullish trade setup. We will use a multiple time frame trading method. Without the multiple time frame trading method, we cannot trade like a professional trader. Okay? Consolidation breakout. Project the size of the consolidation 3 times. First projection, orange line. Second projection, the red line. The third projection, the green line. Leave them on your chart, okay? You want to give priority to bullish signal up to the third channel. But if the price reaches the third projection, which is the green line here, we will start giving priority to bearish signal. What are we looking for? We can look for bearish chart pattern on or near the third projection. As you can see here, if you use this method, you see that we have a head and shoulder chart pattern in the vicinity of the third projection. Does not mean that the price will definitely change direction all the time near the third projection, but very often we see that. All right? Remember that the bullish trend is not finished if the price is still in a rising channel. So if you are selling in a rising channel, you are violating the market pattern and you need to use a top-down trading method to control the risk. The violation of every trading system, every trading method, every trading strategy, one must not repeat the 7 biggest trading mistakes. Go to www.dayprotrader.com, click on biggest trading mistakes. So what I'm explaining to you here, we should not, okay, repeat the 7 biggest mistakes if we apply this trading method, all right? Consolidation breakout, project the channel 3 times, all right? We are giving priority to bullish signal. Normally, price goes above the first projection. You will try to, so if you buy here, your next target is the red line. If you buy above the red line, your next target is the green line. So by projecting the channel, which is a market geometry, that's why we call this video Free CCI Trading Lesson 1, combining market geometry and CCI. So the projection of the channel is what we call market geometry, and we are combining the market geometry with the oversold and overbought CCI. But if we have a bullish breakout, we will try to see whether we have a bearish chart pattern, which we can also combine with the overbought CCI. Here it is. The CCI was overbought here, above the level of positive 100, and the price was forming a head and shoulder chart pattern here. The neckline is the red line here. You see, after the price dip below the neckline, we'll project, okay, set a target again, once again, project this from the head to the neckline, project it down. That will be your first target. All right? All right, it makes sense? So generally, the price will go above the first projection. We'll try to pull back near the first projection. So normally, you'll see like this. So breakout, we have the projection, the orange line. So if we buy here, all right, day trading purposes, goes up to the red line, the price will try to pull back near the first projection, something like this. If the bullish momentum is very strong, the price may not touch the first projection, as you can see here, but will touch the median line of this channel here. the channel between the red and the orange. So be aware of the median line between the orange line and the red line. So you will be monitoring the reaction of the price near the median line and also near the first projected line here. If the CCI is oversold near the median line or near the first projection, that's a good trade setup. Here it is, come back here. This is a good one here. It's not bad, but you can see here this is a bit tricky one because the price is now in a declining channel. Okay, this is a contra trend. The price pulled back to retest the median line, but we are already the price forming a high, a lower high. Now we have a bearish scenario, but the CCI here is oversold. The CCI is oversold. This is a contra trade, a risky trade. I will not take this one. I will let other traders take it. I will prefer to sell on the edge of the declining bearish trend line. All right, but the point of this method is that we have a consolidation, a breakout. We project the size of the consolidation in the direction of the price. We are looking for a price to pull back near the median line or on top of the projected line. So here it goes above the red line. It goes above. We want it to pull back here. It went too deep. Here you see it went above the red line. So whenever it's going out, it's going to the next level from the orange to the red. And then we want it to pull back a bit somewhere near the median line or completely to the first projection. So from the red line, if you buy, the next target is the green line. We want it to pull back somewhere near the median line or near the projected line, which is the red line here. So here, if you buy here, it goes up to this point. We will expect it to come somewhere near the median line or to the projected line, the red line here. So it goes above the red line. We want it to go to the next level and to pull back again here. This is a good one here. This is a beautiful, oversold CCI. Nice one, beautiful for swing trading and for day trading purposes because the price climbs above, the target price level, went to the next target level, and then pulled back to a prior target level. So remember, once the price out of the channel, we project it, that's a target level. You see price reach this level and then gap up above that target because the bull does not want the price to stop here because the bear will try to sell it. CCI was overbought here. But because it's a bullish breakout, we want to give priority to bullish signal instead, Sometimes you may see a contra trend where the price will pull back again to retest it here. So sometimes you may see you come to the next level after the projection, it will pull back somewhere near the median line or completely to the top of the consolidation before going up again to the next target, which is the red line. It reaches the next target, it will try to pull back to retest the orange line or the median line. And then it goes up again, next target, the green line, and then you will try to pull back to the red line or to the median line between the green and the red line. This is what the price is doing all the time. Here you can see when it went up to the first target, which is the orange line, the price gap up a bit here. I hope you can see it. Gap up a bit here. It gap up a bit. It's too late now. It's not going to pull back anymore. When you see a gap, so if you want to know how to trade gaps, trading setup, go to www.dayprotraders. This is a bullish gap. This is a continuation gap. Consolidation, breakout, and a gap is a continuation gap unless we are at a major resistance level. And it went to the next target. Our expectation that we wanted to come back near the median line or to the projected line. It didn't come to the projected line. It stopped at the median line. Check CCI. Is CCI bullish or oversold? Here it was oversold. It was in fact oversold. That's the correct place. It was sold here. Pay attention to the vertical line. It was oversold. The CCI oversold. It was not here. It was oversold. And it was touching the median line. This is a free CCI trading lesson 1, combining market geometry and the CCI. Watch it. From here, from the median line, either it can go from here all the way to the next target, which is the green line. You hit the green line, which is a price target zone. CCI is overbought. ignore now. Now this is the third projection. We can trade this one because the CCI is overbought at the third projection here. I will look for opportunity to sell here. The CCI is overbought at the third projection. Ignore any other projection. But the third projection, give it a chance. It's a contra trend. Use a top-down trading method to trade it. Pull back again to the red line. Now the CCI is overbought. It's oversold after the pullback. That's what we want. Reach the target. Pull back to the prior target. Oversold. Take it to the next target. Okay. So here you pull back here. The next target should be, we will project it above the green line here. All right. But usually, after the third projection, sometimes the price will find it very difficult to reach the fourth projection. All right? But dynamic bullish, I'm not saying that it cannot go, okay? Dynamic bullish stock can go to the fourth projection, even to the fifth projection. But generally, most stock will find it difficult to go beyond, okay, the third projection. What you need to remember, when the price reaches the third projection, instead of using, okay, the full size of our original channel, you can use half of it. What do I mean? Okay. Half of this channel is something like this. Half of this channel is half, isn't it? We divide the channel into two. So after the third projection, project half of the channel to the top. You see here? That's what I do myself. And you work here, you see? So you will set a target there. So which means usually when the price reaches the third projection, is considered as overbought in an uptrend. In a downtrend, when the price reaches the third projection, all right, is considered as oversold. But because the smart money always want to buy or sell at the best place, they will push it a little bit up, near half of the projection of our first channel. So after the third projection, pay attention to the okay, divide, okay, the original channel into two and project it on top of the third projection. All right, so the price will go a little bit up and monitor the reaction. And here it is, it form. You can be very patient here. As you can see, you can be very patient. You form a head and shoulder pattern, and from here you know that, okay, check the fundamental to confirm the technical setup here. This is a technical trading, bearish trading setup. Check the fundamental, check the economy news, check the market environment, and then swing trade it or day trade it gradually. Okay, as if you sell like this, price start going down. Okay, you will be positioning yourself here, 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 taking it down on the edge, Okay, it makes sense without violating the market pattern. The opposite is also true in a downtrend. So if we put this chart upside down, which means consolidation breakdown, what do? Because we have the original channel before the breakdown, we just project it one time, second time, and the third time. After the third time, we use half of our original channel. So half of our original channel, we projected half of that channel below our third projection. What the price will do in that case, all right? So suppose this is a downtrend, all right? So price breakouts, okay? It will try to go to the next target, which will be the red line. So we are now going down, okay? Stay focused, okay? Stay focused. Probably try to go to the first target, which is the red line, okay? After reaching one target, generally they probably try to retest the original line. So we try to come back and retest the green line or the median line between the red and the green. Okay? So it goes down to the next target. You try to come near the median line or at the beginning again. Now from there, from either the median line or the original line, you go to the next target, orange line. Okay? We are using the overbought CCI in this case because we want to give priority to bearish signal on the edge. Near the median line, okay? So here it is. So from here or near the median line, it goes to the next target. You will try to retest either the median line. So we are watching the CCI is overbought. Okay? Or you go to the red line again. Either from the median line or the red line, you go to the next target, the pink line. Okay? Again, so first projection, red line, second projection, green line, third projection, the pink line. What do we need to do at the pink line? Now we measure half of our original channel, which is somewhere up here. Okay, we measure half of it, only half of that channel, because we have original channel on top here, all right? So first projection is the red line, second projection, the green line, okay? Second projection, the orange line, third projection, the pink line here, okay? So once we reach the third projection, once the price break out, do your projection, get them ready, okay? Get them ready straight away, okay? As we reach the third projection, we project half of the original channel somewhere here, because the smart money love that, okay? But do not be surprised, some stock will go down fourth projection, even a fifth projection. Do not violate the market pattern. And as a technical trader, this is about the trading setup using market geometry and overbought and oversold CCI. This is a free CCI trading lesson 1. I invite you now to follow me in the next video when we will be talking about free CCI trading lesson 2. Okay, I'll be showing you more tips and tricks that you can use to improve, okay, your CCI trading by combining CCI trading setup and market geometry. In this video, you can see that we were using the horizontal channel. The scenario is very clear and simple. A consolidation was in place, and then we have a breakout. Don't apply this in another way. Consolidation is in place, and then we have a breakout, okay? Or consolidation is in place, and then we have a breakdown. All right? We wish you the very best in your trading, and until the next time, enjoy yourself and be very happy. We are the TSTW24 traders talking about free CCI trading lesson 1, combining market geometry and CCI. The projection of the channel is what we call market geometry. Until the next time, enjoy yourself and be very happy. Speak to you soon.